I did, Scott, and to me, Qualcomm is one of these bellwethers that, look, you've got Apple, doing really well, semiconductors are doing well, and demand for 5G is picking up. Qualcomm's just a depressed stock with a great balance sheet, and they said they're going to buy back over 10 billion of their stock. So, to Bryn's point, you got to look at kind of quality companies that are going to lead the way out, and some of them are going to be highly valued, like an NVIDIA. Some of them are going to be kind of value tech, like a PayPal. Which we also own, and then you got the Qualcomms, and you got the Facebook's another one that's value, and then you get good companies like Google. But I think if you stick with the high quality technology companies, buy them on the dips, I think you'll be well rewarded going into earnings season, because I think investors are going to reward true earnings, and top line growth is going to be great, but until you produce cash flow, earnings growth, and actually show that you're growing through kind of a higher interest rate period, you're not going to get rewarded.
Jim can barely contain himself. He's tired of talking about Apple and Microsoft and Facebook and Google. Now you're in his wheelhouse, right, Jim?
Well, listen, Sarat and I navigate the same waters in the same boat, frankly. But here's the thing. He sort of left the punchline. The big part of the story is that the multiple on Qualcomm, absolutely, in my opinion, should expand. Right now on this year's earnings, it's 13.3 times. On an absolute level, that's low. On a relative level to the quality of the earnings, the rate at which they're growing, the rate at which they're diversifying their earnings away from Apple, away from smartphones, into automotive, into Internet of Things, this deserves a 20 multiple. Now, if you put a 20 multiple on this year's earnings, it gets you around $230 a share. I'm putting it out there for the second half of this year, Scott, $230 a share. I think that's 45% higher than now. I know it sounds crazy, but tell me where I'm wrong.
I mean, anybody want to tell him why he's wrong? Pete, you have a take on Qualcomm? I don't think you're in it, and you like to play some of these more mega caps than some of these old line technology names.
Yeah, although there are some semiconductors that I've had positions in for multiple years,
Sure.
Micron, Marvell, some of those names, I like the performance out of those. The problem has been that, and Jim, I think you're right, if it got to a 20 multiple, the problem is that this has been a stock that for whatever reason has paused and not been able to make those kind of moves to the upside. And so, it's a great company. They're in the right spot. They seem to execute extremely well most of the time. But when you look at from a performance standpoint, it just hasn't been able to do that. I don't disagree with you on that 20 PE. That puts you up there over 200. But the problem is, when and will it get to that level? We're seeing it out of some of the other names. We just don't see that out of Qualcomm. I think that there's a lot going on in the 5G space, obviously. We talk about data centers all the time and all of that in terms of the semiconductors, automobiles, of course. So there's a lot of different areas where most of these companies truly do distribute where they're coming from. So I like those names. I just like the more bang for your buck that you're getting right now out of Micron, out of Marvell, out of AMD, out of NVIDIA versus Qualcomm at this point in time.